Welcome back to another quick stock analysis, and today we'll be looking at Amazon.com. Amazon.com is, everyone should really know, is the online retailer, online bookstore that turned into an online everything store. It's absolutely crazy, but that side of the business isn't very profitable. The real side of the business is Amazon AWS. AWS is their cloud hosting software company, whatever you want to call it. It's growing at about 47% year on year. It's the largest web services company, and probably most importantly, it hosts most of the streaming content in the world. A very interesting point there. Probably doesn't host YouTube content. I would imagine YouTube content is hosted on Google Cloud. But yeah, it holds a lot of the streaming. A lot of Netflix's entertainment is all hosted on there. So when you click play on Netflix, you're actually connecting to Amazon Web Services, which is then streaming it to your house. It's a pretty crazy business, and it's everywhere. And it was, up until 2 years ago, probably the quietest business in the world. Amazon, though, if you had bought Amazon at the trough of the 2000.com bubble, you would only be up, no, not 15,000%. We can get more out of that than that. You would only be up 18,000%. Yeah, unfortunately, this was a dead stock for most people who bought this during the .com bubble. Probably a lesson to be learned. However, if you're looking at the stock from just a price to earnings perspective, you're not going to do very well. You're looking at minus 40% based on earnings over the next 2 years. That's pretty horrible. That's a minus 17.7% year-on-year return. That's if you're going by price to earnings. Now, Amazon is a very complicated one. For years, Amazon has been suppressing its earnings. It doesn't need to make anything, and the price has been driven up by the possible earnings of free cash flow that it could earn in a couple of years. We might be getting to that point right now where Amazon needs to start turning on the profit tap. We'll see. Also, based on free cash flow, Amazon doesn't look all that great. Amazon doesn't produce a ton of free cash relatively. It does produce a ton of free cash, but for its market size, it doesn't produce a ridiculous amount. It's currently got a price to free cash flow of minus 1,314, but that's because last year they made absolutely no free cash flow whatsoever. They took on a lot of new capex in buildings and took on a lot of new hirings, and that has lowered the amount of free cash flow that they have to hand. However, if you look at analyst estimates, believe it's going to go up considerably. This does look to me like analysts do think that they are going to turn on their free cash flow tap sometime soon, unlocking a lot of free cash flow to shareholders, buying back shares, not doing stock computation for their employees anymore. This could all be really possible. This could mean that Amazon is going to invest less into its company and start delivering cash flow back to its shareholders. That's the type of company that I look for personally, because I feel like they are more predictable. So because Amazon is suppressing its earnings, we kind of want to look at some other metrics to determine if Amazon is over or undervalued based on its history right now. So I tend to look at operating cash flow because it's got a good correlation of being in line with its operating cash flow over the past 20 years. However, we've got a few anomalies here that pop up that I'd like to get rid of. So if we bring it to about year 11 and get rid of some of these like 90% and 100% growth year on year, we start to see that Amazon does completely track its operating cash flow line. And recently, with this big drop, it's overcorrected to the downside because analysts and the market found that the operating cash flow was going down, so Amazon needed to pull back. But it appears that Amazon has overcorrected to the downside. This leaves the possibility, and this is a crude possibility, that Amazon is actually 244% undervalued right now. That's a little bit pie in the sky, I think. That's a little bit far, but analysts are certainly thinking about this right now. But as usual, I'll head to the custom forecast calculator. And what I'm going to do here is I'm going to be stupidly conservative on Amazon. I'm going to set this as a price to free cash flow of 15, but this thing usually gets like 20, and I think it's currently at about 39 times free cash flow. Analyst estimates are also saying that this is going to grow pretty fast in the future. They reckon it's going to be 62% in the 2022. It's It's going to be another 40% growth in 2023, another 26% growth in 2024, and then they've kind of set a 19% recurring growth going into 25, 26, and 27. Now, let's just bring that down with its long-term growth and just set it at 19% all the way through. So we've got a nice even curve. Well, if we think it's going to be at a price of 15 times operating cash flow in 2027, that leaves us with a 69% capital appreciation. That's a total annual return of 9.87. And I think that's quite conservative, if I'm honest. Remember, this is the bare bones of the business. This is if the operating cash flow doesn't really grow that high and we don't see any earnings. If this thing turns on the earnings, that means share buybacks are probably going to come back to the company. It means there's going to be a better PE ratio, which gets more people into the stock. And that will, in turn, expand the operating cash flow multiple a little bit. And then I'm really just looking at analyst estimates here on free cash flow, if I really have to. If we think that there's going to be a price to free cash flow on Amazon of 15 in 5 years, which I think is extremely low, we're going to end up with 50% capital appreciation at 7% a year in share price growth. I think it's probably better to have something more like 20 times free cash flow here. So if we set it at 20 times free cash flow, there you go. You get 104% return in 5 years. That's a total annual return of 13.52, which is above the market. I think Amazon is pretty good here. I can see me buying pretty soon.